Hey, welcome back to another pipeline trading video. I had to do this video real quick because the video I made this morning, I followed through with my trade on the roll that I that I did. So I wanted to actually show it in real time, how this whole thing played out, because a lot of people assume that they hear trading, and yes, I'm sure a lot of people out there just think I'm going to buy this at this price. It's going to go here. I'm going to make a quick buck, and don't really do all the research and the work. This is something that I've been doing since 2009 and learning and reading books. And I can't even tell you how many hours I've spent learning this. And I didn't go to school for economics or anything like that. The greatest thing that we have as an opportunity in our society right now is the fact that the internet exists. There are Harvard programs and Stanford and all sorts of seminars and lectures that happen that are free, and anybody can watch and learn as if you went to the school. So I definitely would encourage, not to say that I'm against school. I think school is great. There's a lot of benefits to it, and it's something that is important. However, don't let that stop you. There's a lot of things that you can do to learn. There's a lot of books to read. There's so many videos and content like my channel, but there's hundreds of others just like me, and a lot better than me, in some regard to the content that they provide. So everybody has their own system, and that's why it's very, very important that you follow your game plan. And there's a video I've made, just on this market psychology. The hardest thing in this game is you are constantly at battle with yourself. That's it. Keep that in mind. Discipline is everything. It doesn't matter how intellectually smart you are. It doesn't matter your education. None of that matters. The best traders and investors, people that work at hedge funds and banks and all these institutions, there are a lot of people that have higher degrees and all of that stuff that are not good at trading. They have other talents. And one of the big things is discipline. Some people can't regulate their emotions and deal with the pressure, and they fold. So, one of the things I wanted to just do real quick is this morning I had a game plan. It was breaking out of the wedge on BMNR based off of my ETH being out of the bear flag that I had. And it goes back to buy the rumors, sell the news. I covered that in the other video. And that's my strategy. That is my game plan that I thought about for, I don't know, probably 30 hours of work, that I put this whole plan in my head. And if this and this plays out, I'm going to sell covered calls and I'm going to add a short position, because if I'm wrong. Great. However, I'm still making money. If this keeps going up, and I'm going to go into how I did the cover calls, I still have a month to roll out into another month or two or whatever, change my expiration. If I'm right, this option that I sold is gonna actually close worthless. The premium I collected is mine, and I'll make that plus what I'm doing on the short right now, and I still own the stock. I didn't get rid of it. So as you can see, ETH is starting to pull back. We have, this could even be a cup and handle. I don't know. But I don't want to learn the hard way where this is a bearish formation. I don't take profit, and this whole thing curls over, and I'm sitting there holding this Well, I could have actually made a really good premium, which I'm going to go into. So if you look at BMNR, it played out. The measured move happened, and I was a little early, which was okay. And the reason for that, and I'm going to show you real quick, is when you're trading options, there's a bit of a spread. So let me just pull this up. Give me one moment. I'm going to pull this up right here. Let's say I'm going to sell BMNU because that's what I had. Okay. I went to the May 15th expiration. I wanted to sell for 2. It's in the money. And a lot of people don't like this, but I have a good hunch that the whole thing's coming back down. You go to your strike price, you could pick $2, $3, $4, whatever you want, and you could pick how long of an option that you want this, how long is of a time horizon you could choose from, whether it's 1 month, 2, or 3, or 4. Okay. I picked May. If I had weekly, I'd be doing it weekly. Go to action. You sell to open because this is you're opening your position. You are now the insurance company. So you're opening. And how I like to explain this is you pay a premium every month for car insurance. If you don't get into a car accident, do you give your insurance company back the money you paid every month? No. This is the same thing, except now I am the insurance company. So I am selling my shares at a future date for a set price today. So May 15th, someone is willing to bet that BMNU is going to be over $2 a share. They are going to give me right now 49 cents per share. So remember, one contract is 100 shares. And I'm just going to use this as an example. I'm not going to show what I did. I'm going to wipe it out later and cross it out. Everybody has a different account size. So let's say you have 200 shares. That's 2 contracts. Covered and uncovered. Covered means you own the stock. Uncovered means you don't own the stock. So it's a naked position. So I own the shares, so that would be covered. If BMNU is above $2 a share by May 15th, I have to sell. Let's say BMNU goes to $3. I have to sell my BMNU shares for $2. So I'm missing out on theoretically a dollar profit, which is it's a lot. It's 30%, 33%. However, I collected, as you can see here, 55 cents. Now, just from doing that position this morning, I'm already up 10.91% since I think I did it at 10:15 as an example. This is just as an example, okay? Because I'm also trading a lot more shares on margin. Now, this is called a covered call. I sold a covered call. And the reason behind it is if I'm right, this is going to close worthless and this is going to be at its full value. So as it keeps going down, this price right here is going to keep increasing. That's how it works. And the other thing that I wanted to go over right here is why you would do something like this. I believe that BMNR is going to continue to go up. Now, why not collect a premium while holding it? And as it goes, you can average down. You can use this to hedge your bet and put a short position on with a tight stop. There's so many things that you can do in the meantime instead of just holding the stock and waiting for it to go to your target or whatever your strategy is. That's why you would do something like this. The other reason why I did this too, just so you know, I'm going to pull up the options chain. As you can see, BMNR is 3 days to expiration. You're going to notice we have 15,000 contracts open on a $17 strike for the puts. So the right side is betting that this price is going to go down. The left side is the prices are going to go up. And this is called an options chain. So when you tally up this, just this column on open interest, and then you could do it from the same points, you'll see, is it skewed to more upside or more downside? Are more people betting that it's going to go up, or are they hedging that it's going to go down? That's what this is good for. So when I did the math this week, I have the max pain at around $20.50. Now, keep in mind, we were trading at over $23 a share this morning. So why this is important to explain it, let's say the price goes to $25. So from here, 10, that's 19, you're at 23, you're at, what is that? 33,000 contracts. So 33,000 times 100, it's how many shares are in the money that need to get paid out. So typically what would happen in these events is you could see that the calls are really heavy around this area. The puts are very light. So I have a hunch based off of just this. It's almost like the guys that go to the racetrack for horses. You know, someone once told me a while back, he said, I don't watch the horses. I don't care about the horses. I watch the board. I follow the money, because horse racing is known for being super corrupt. So if you know where the money is and who's betting on what, you have a good idea on what they're doing or what horse is going to win. It's the same type of concept. This is why when people say trading is gambling, yeah, I'm sure people do gamble and just don't know anything and say, okay, it's going to go up, and they do it. If you understand the Greeks and you learn, the delta and the gamma and the theta and all the Greeks, and you understand how these are priced and valued, it changes the whole game for you. So I would strongly encourage, and I know it's a little intimidating. It was for me. When I first started trading, I was so scared to touch options. I never touched it once. Then I met a guy from New York who actually dumbed it down. There weren't really YouTube channels at that time that explained it like elementary. And if someone's not, pretty much showing you and telling you, here's what this means, here's what this means, you're just looking at a bunch of numbers and you don't understand it. So he was actually really kind to take some time and just basically explain. And he used to trade options on Tesla. And ever since then, it changed everything for me on how I traded, how I invested, and what I was looking at, what I was reading. I was understanding the numbers a little bit better to see exactly where and what levels there was a lot of interest and hedging going on. So when I did the math this week, and listen, this can change also. You always want to look at it every day to see, are the numbers changing? So from last night, I have a max pain level. What max pain means is, where do the institutions want the price to be by Friday's expiration so that the majority of the contracts on the call side and put side expire worthless. That's what that means. So that they do not have to pay out. So it's about $20.50. This is where the max pain is. So the majority of these positions, when you tally these all up, there's a lot, will expire worthless. And the majority of these positions will all expire worthless. And listen, it changes on Friday. There are times where there's short squeezes and things that, again, if there's an agenda that nobody knows about and they want to basically put the pressure to somebody, and let's say there's a firm or somebody that they know that's betting heavily one way, there are firms out there that combined will squeeze somebody, whether it's up or down. And that's where you see like the GME example with the squeeze that happened. Um, the more people that saw and the more people that were shorting it, and it got attention. There were a lot of people that knew exactly drove the price up hard enough that it was going to make those shorts cover. And when you cover a short, you're essentially buying the stock back because you're borrowing it at first, hoping that it will go down. So if I borrow at $20 from you and it goes to 18, I buy the stock back at 18, give you back your shares, I made a $2 profit per share. So what actually happened was they borrowed at 20 and then had to buy it back at 40, 60, 80. It was just wild. And a lot of people, there were some hedge funds that got smacked pretty bad. But in the long run, I think a lot of them still made a boatload of money because they have unlimited capital. And if you remember, as fast as it went up, it came down. So if you had enough cojones, first of all, and capital, you would have been fine. So I hope this explains it better. But I wanted to show this because this is another reason why I decided to sell the cover calls, because I waited for it to go to, and I'm going to show you this side too, because I'm doing leverage, a lot of leverage, just because of my account size. And you can see there's 18,000 open interest contracts at $2 strike for BMNU. So that was another thing that I was thinking. There's a good chance we're at the top of the bear flag, that by Friday, because BMNU is 2x leverage, that this will close below $2 a share. And I could be wrong. It could close above it, right? And you could see that I'm not going to have too much wiggle room next month, because it looks like they're already betting that it's going to be close to $3 a share in May. And if that were to happen, I could roll my contract from May, let me see it, to June, right? So you could see I got paid 55 cents, and you could see that this is already 10 cents more. And I could keep rolling it, or I could take a less premium and I can maybe go out to September, for example, and instead of having to sell my stock at $2, because let's say it were to run to $4 or $5, I can then look for a further strike out and try and pair it. So, like, for example, I could sell it for 3. So instead of me having to sell it for a 30% discount, I could roll it to a $3 strike till September, get actually paid another 25-cent premium, and then between this premium at the 25 cents plus the 55 cents, I'm almost 100% anyway from where I bought. Actually, less because I've already rolled this for the last 2 months. So I'm already up more than 25%. So this is just an example of once you learn this, there's so many things that you can do if you're in a swing trade and you got caught, you're down a little, and you want to hold it and believe in it. I'm doing multiple things, so I am a believer. I do think where this is going is more than 2-3x, and that's one of the reasons why I'm in this position. And also, I'm shorting and trading smaller sizes in the meantime just to pay myself because this is my livelihood. So, building the position while paying myself, putting food on the table, this is how you would do it. And then the other thing too, keep in mind, we have what was it? When I say buy the rumor, sell the news, we have the Clarity Act bill, uh, I guess update you would call it, on the 16th. So that's also another interesting thing. That's Thursday. If that does not go good and it does not get passed, uh, yeah, expect volatility to the downside. So again, I'm just giving you a little example of my blueprint, like what I'm thinking of when I'm putting these positions on. It's not just me looking at the chart. There's other factors with the news and what's going uh, on why I would do something like this. So I hope that this helps. If you like content like this, hit the subscribe, like it, comment below, give me some feedback if you want me to do other things or show other types of strategies out there, because there's so many things with options that you can do with the straddle. There's spreads, there's all sorts of things. If you're more conservative, you could even do cash secured puts where you get paid a premium just to sell the contract on the downside. And I believe I made a video on that, on options. But let me know. Give me your thoughts. Stay disciplined, stay patient, trade with intention. God bless you all.